Hi, everyone. Welcome to Unchained On Air. I'm your host, Steve Ehrlich, executive editor at Unchained, and we have a really special lineup for you today. First, we're going to kick things off with a Bits and Bips, the interview conversation with Owen Lau, head of fintech research at Clear Street, and one of the top equities analysts covering the entire industry. Then we're going to have a discussion, I guess a debate that was pre-recorded yesterday between Mark Palmer of Benchmark and Vinny Lingham of Praxis Capital Management, debating the bear and bulls, the bear and bull cases for strategy in this, I guess, difficult environment when it comes to DATs. A lot of fireworks there, so be sure to stick around for that. And then finally, we're going to wrap up with a conversation with Bob Diamond and David Schamis from Hyperliquid Strategies, the top HYPE DAT that actually just started trading this week when its business agreement was finalized. And we're going to get into a lot of details about what it's like launching a DAT in this environment, how the stock's been doing so far in its first couple of days of trading, what it's like running an altcoin DAT as opposed to one focused on Bitcoin, ETH, and a lot more. So we've got a really terrific lineup for you, and be sure to stick around for all the conversations. But before we get into our first conversation with Owen, I just want to take a brief moment so we can hear from the sponsors who make the show possible.
Mantle is pioneering blockchain for banking, a revolutionary new category at the intersection of TradFi and Web3. Follow Mantle_official to learn more.
All right, so welcome, Owen. Thanks for joining us. You're a longtime friend of the show.
Thank you for having me, Steve. Good to be here.
Yeah. So let's just kind of like get into things right away. I want to get your sense of the purpose of this conversation. I think is really, um, I want to get a sense of how crypto stocks are performing that aren't of the crypto debt variety or the Bitcoin miners because they've been in the news a lot. Um, Bitcoin miners have largely been ascendant despite really challenging economics because of the demand that comes from their facilities from AI developers. DATs have been struggling for their own reasons. But one of the things that I like about you is that you cover exchanges, you cover Circle, stablecoins, kind of a much um, wider cross section of the industry. And that's what I wanted to kind of get into here with you. So maybe just to begin, I'd love to get your sense of the market and really how it's impacting um, some of these other companies, and in particular some of the strategic decisions that they're trying to make right now
Mhm.
during this bearish period.
Yeah, so there are always two key factors that affecting crypto equities that I cover. So you correctly mentioned, I cover Coinbase, Circle, and Bullish. And I would say the two factors are number one, the macro factors. It is related to interest rate, it is related to tariff, and some other like broader macro theme. The other one is the fundamental factors that you try to get into, and I can talk more about that from both perspectives. From a macro standpoint, there are lots of news flow coming in and out. We have like tariff news, and then about a month or maybe like 2 weeks ago, uh, the market has priced in a very low probability of December rate cut. And since then, the market has turned and pricing at a higher probability of December rate cut. So you saw how that changed the sentiment and also the price action for Bitcoin. The interesting thing is there's still a very high correlation between Bitcoin and the equities I cover. To be fair, I don't think that's a good sign because actually when Bitcoin goes up and down or when you see volatility, there's actually higher trading volume. So interestingly, when you see higher trading volume, revenue it's actually higher. But you see some of the names I cover, when there's high volatility, the stock goes down, but revenue actually goes up. So you see that dislocation between the fundamentals and also the sentiment. That's why sometimes I would say over the past 2 weeks, I actually see more opportunities to get into these stocks, the stock I cover compared to many other stocks. So I think that's kind of the introduction or maybe the key point I want to send it out.
Yeah, that's a really interesting point because one narrative, and I was actually going to get into this later in the conversation, is that Fundamentals for crypto, the actual network fundamentals seem to be good and improving, but sentiment is very poor. And I actually wanted to get your sense of how, like, I hear about that a lot in the context of the price of Bitcoin and ETH, but I wanted to kind of get a sense of, does that carry over into equities? Like you
Yeah,
mentioned, especially the non-debt equities. So the fact that you brought that
yeah.
up for Coinbase is particularly interesting. It's funny, the Coinbase narrative. I mean, they've been trying for years and years to sort of pitch themselves as sort of a more diversified play on crypto and to break this correlation with Bitcoin, not just by diversifying trading volume away from Bitcoin and ETH to alts, but then also building out their subscription and services revenue to, I think, be at least 50% of the total net revenue as well, to sort of smooth out
Mhm.
that seasonality. Can you maybe get a little bit more into that, like sort of the divergence between the revenue and the price? Because that seems very atypical and frankly something I think would be more applicable in crypto, where the traders don't pay as much attention to fundamentals, but it's happening here too. I'd love for you to get a little bit more into that.
Yeah, I think there are lots of factors affecting that still high correlation. Part of that may still reflect that the immaturity of this market, right? So if you look at the traditional market, if the stock price or the broader market S&P 500 goes down, if you look at some like traditional exchanges, like their stock price actually went up in that down market, but you don't see that in crypto market. So part of that, again, maybe it reflects the immaturity of the market. Maybe over time, that correlation could break. We'll see. And then the second point is, you're right, Coinbase has been diversifying away from the trading revenue as well. Even though you don't believe in that high correlation, or you believe in that correlation, in some sense, part of the revenue, it's actually kind of like non-volatility driven, which is like stablecoin. They share around like over 50% of half of the revenue from Circle for the reserve income. So those revenues are more stable and predictable compared to trading revenue. So over time, my prediction is that correlation could break between Bitcoin price and crypto equities or maybe crypto exchanges. But in the near term, I still see like people still try to tie that equities fundamentals to Bitcoin price, regardless of the fundamentals. Because I agree with you, I actually see a lots of TradFi companies embracing crypto, and we saw the news from I think Vanguard, Bank of America. They started to open up their offerings to their clients. And maybe over time, you can start to allocate from 1% to crypto to 5% to crypto. So those are the incremental money, the fundamental that support the blockchain adoption longer term.
Yeah, the capitulation of Vanguard was particularly compelling, just given how obstinately opposed they were to all of this for so long. I don't think they've quite reached Jamie Dimon, J.P. Morgan, or Larry Fink BlackRock territory, but we'll have to check in another year or two and see what happens once Vanguard starts launching their own ETFs and tokenizing stocks and running perhaps their own ETH layer too. Not reporting, just some fun conjecture.
I
Uh,
agree.
okay, so I want to. One other big difference that I see is like there's a lot of R&D happening when it comes, and a lot of um, spending from some of these companies. And let's talk about Circle, I mean Bullish, Coinbase, etc., to build out product lineups because they're much more diversified than a DAT, for instance. So, and Bitcoin miners again are in their own particular category. So, I know you spent a lot of time talking to these executives because they think, I mean, quarters, months, years ahead. And I think in one of your reports, you even talked about how Circle, there's a mismatch between expenses and revenues because of some of the work that they're doing to build their ARC blockchain and sort of uh, expand their distribution platform. So, can you talk a little bit about what's happening there and like how you pay attention to what's happening behind the scenes and what investors um, can do to understand how all of this will translate into future revenue and growth?
Yeah, I think because we are still in the very earnings in terms of the blockchain adoption, we need to build the infrastructure first. And then we can ask people to come in and use our services, right? You cannot just like magically create an infrastructure, then people would come in. First of all, the number one thing, just like Circle you mentioned, they have to build an art layer one. And then they have to build more utility and functionality to attract people to come in. You have to provide more incentive for people to come from maybe your competitors to your platform. So number one, it means that number one, you have to spend first, and the revenue would come later. But it's fine. We understand that you're investing for the future. Some people may not like it. I like it because I like company investing in the future. So I like that trajectory. But the bottom line is they have to prove that eventually they can get the revenue in maybe 1 or 2 years. So that's the bottom line. The second point is it also takes time to get the people in, right? So you need some time, maybe, I don't know, maybe 3 to 6 months to invest the infrastructure. And then you may need another 6 to 12 months to attract customers to come to your platform. So, and then maybe after 12 to 18 months, you start to generate revenue. So that's the mismatch I'm talking about. You need to invest first for the future. Those are good long-term projects. Why? Because blockchain can make the transaction faster, cheaper, 24/7, and also global. So those are the pitch to customers to come into your platform. And I think those are good pitches. And once you have that value proposition, you have to still convince the customers to come in. So that's why it takes time. There's a mismatch. I'm not too concerned about that. But that's kind of the reality in the blockchain adoption right now. We need to build the infrastructure. It takes time. You have to be patient and invest in these companies longer term, not just for the next 3 months and 6 months or so.
And how does all of these projections and a lot of this again was issued based on some Q3 earnings, which I know each company reports on slightly different days and weeks, but we're 2 months now almost from October 10th, and the massive wipeouts, liquidations, and this very bearish climate. How does any of that impact like either what you're saying or some of the guidance that was issued from the companies that you cover? I also presume that maybe the answer depends on what happens. I mean, we're not in a bear market yet, but the climate is certainly bearish, and there's a wide variance in projections for what next year is going to look like.
Yeah, exactly. So taking a step back, like it really comes down to your view about the next year. Are we getting into like sometimes like I know some people talk about crypto winter right now. Some people don't believe in it. Some people may believe in it. To me, what I'm looking at is like you're right, looking at the guidance and also look at the price action. So you mentioned the massive liquidation, $19 billion on October 10th. That actually may drive, up a little bit of the liquidity. But when I look at these stablecoin or USDC market cap, it actually has increased quite a bit over the past 2 weeks. So it's not like people are just taking the money, convert from USDC and USD and put that into the bank. I haven't seen that. I actually see market cap of USDC keep going up. So what that means is there may be some auto deleveraging, like some mechanical robotic sell-off that creates some kind of panic that drive all the equity markets. But as a human being, we can dissect and filter out this noise and use our analysis to make a call that is it actually justified at this level. That's why we upgrade bullish about like few weeks ago, because we felt like that liquidation drove down the price. At the same time, the fundamental was still very strong. And since then, the stock actually recovered quite nicely. So to me, from like the human investing standpoint, I actually see this as an opportunity, not a risk. So I mean, there's still a risk, always a risk of in investing. But what I want to say is we have to come down to our own analysis, based on all these factors and evidence so that we can make a call that is different from the robot.
Okay, so we're going to continue this conversation in a moment, but first we just need to take a break to hear from another one of our sponsors.
Mantle leads the establishment of blockchain for banking as the next frontier. UR is the access layer that transforms Mantle Network into a purpose-built vertical platform, the blockchain for banking, that enables financial services on-chain. UR unifies and vertically aligns Mantle's focus on payments, trading, and assets. MI4, METH protocol, functions FBTC, supported by developer grants, ecosystem incentives, and the industry-leading distribution platform through the UR app, Reward Station, and Bybit Launch Pool. All economic activity within UR will be captured by Mantle Network to further drive value to token holders and establish its significance in blockchain for banking. Follow Mantle_official to learn more.
Okay. All right. So we're back. Owen, a few more questions on the exchanges that you cover, Coinbase and Bullish, and then I want to go to Circle for a couple of specific things. But for one, I really want to get your sense of prediction markets and how either of those platforms might try to utilize them into their operations. I mean, that's clearly between Kalshi and Polymarket, the rising star of all of crypto. Seems like every other day they're raising billions and increasing their valuations. But I haven't heard much news or much noise. Robinhood's recently launched. I know Gemini either is about to launch or has announced their intention to launch. Coinbase seems to be a natural place to do something like that as well. So, what are you hearing about that?
So um, I think more and more brokers and like these crypto exchanges will launch prediction market offerings at some point. Like you saw the news. I mean, there was like many speculation out there that I think Coinbase is partnering with Kalshi, and I think there was a leak report out there that there was some pictures of Coinbase prediction market as well. They have a system update event in 2 weeks, and I'm going to San Francisco to listen to that as well. So there is a high probability that they will announce something in 2 weeks about maybe prediction market or tokenization or international expansion or maybe even agentic AI integration, that kind of good stuff. So to me, further diversification for platforms such as Coinbase and Bullish makes a lot of sense. For Circle, I would say, yeah, just keep going into the B2B cross-border payment, Arc layer one, and those are good channel for them to further diversify their revenue stream.
But okay, so yeah, we'll have to keep a lookout for that. I know Bullish is more institutionally focused. You actually put
Yeah.
out a report um, about a key hire they just made for CoinDesk to try to monetize their retail audience. But prediction markets certainly seem to be a retail play. So out of the two, I mean, excuse me, I know they're in different worlds in terms of size, at least at this point. It seems like it might be more of a Coinbase play. I am
Mhm.
curious though. I mean, Coinbase has had some successful launches, but they've also had some flops. I mean, their NFT exchange did not do well. Base has been successful in terms of getting traction, getting a lot of attention, but I mean, you and I have spoken many times about how it's still a long ways away from meaningfully contributing to Coinbase's bottom line. Is there anything in particular that you think, when it comes to Coinbase's strategy in prediction markets, that's going to be really important for them to get right?
So So first of all, they need to get it out first. So I think the issue right now is they make the announcement a few months ago, but we are still waiting for the new products to come in. So I think the first step is they need to launch the product. Maybe it's in partnership with Kalshi or some other platform. We don't know. We may know that in 2 weeks. The other more technical question is, do they want to follow what Robinhood just did? Last week or so, which is form a joint venture and have their own so-called CFTC license, DCM and DCO license. I know it's getting very technical, but
Mm-hmm.
what that means is they are going to be their own exchange and launch the product, like the event contract product on
And
their platform.
that's what Kraken
That
just did. They acquired those licenses. They have
exactly,
a DCM and an FCM, although I don't think
exactly.
they've announced anything related to prediction markets yet.
Exactly. So I don't want to get into like too much detail, but what that means is if they have the DCM or DCO license, then they can launch their own event contract. They can clear that contract. They don't have to white label or partner with some other prediction market to have their own to have that product. So they can control their own destiny. So that's what Robinhood did about like a week or 2 weeks ago,
Eh,
or that announcement. That's an important step. The question is, will other broker and platform follow that model?
yeah, and that's also what Polymarket did, which is what enabled their reentry into the U.S. They made a purchase a couple months ago or something, and just were able to launch that.
Exactly.
Yeah.
this is an important step because once you have that license, you become a regulated platform.
Yeah.
Then like you're not become like like you're not like that opaque that maybe people don't trust you and all kind of good stuff. But again, the bottom line is if you have the license, you're being a regulated platform. If you have the DCM or DCO license, you can also like put out your own contract and control your destiny. So that could be a logical next step for many brokers to think about.
And I also wanted to ask about going back to Circle when it comes to prediction markets. To me, like this hasn't been discussed very much, but I know it's in the air supply a little. Like, is there a world? I mean, where like what is Circle doing to try to help protect its distribution on platforms like Polymarket? Because right now they're getting all the yield, Polymarket's not. I know that there's some things happening behind the scenes to like sort of like stake or generate passive yield
Mhm.
through stable coins and other things that are deposited in these event contracts that sometimes don't settle for months.
Mhm.
People don't want to forego those gains, but it could be I don't know if a vulnerability is the right word, but um, obviously Circle is going to want to protect its market share in these
Mhm.
platforms. And like, what are they doing to protect them? Do you have any sense?
So I think the number one thing they're trying to do is to increase the visibility and try to list Circle on as many platforms as possible. So example, it's a partner with, let's say, Coinbase, right? They have the partnership already. And then they had a partnership with Binance. They announced that last year. What I am seeing, what they're trying to do is to have more partnership with many platforms so that it can drive the adoption of USDC within the trading ecosystem. So that's the number one thing because their revenue reserve income it still contribute a very vast majority of their revenue base. So they want to increase the market cap of USDC as much as possible.
Yeah.
That can drive high adoption. The second one is again go back to the layer one, right? The ARC. So now I think a lot of the USDC run on Ethereum. Some may run on uh, Solana, and some may run on Aptos and some other layer one. Maybe longer term, they want to have their USDC run on their own layer one as well, right? So that could also retain some of the
Mm-hmm.
fees within their own ecosystem. And then they also just launched a pretty interesting project called Circle Payments Network. So that essentially try to disrupt the overseas like the remittance, the the Fed wire path. So that is another interesting project that they want to try to get the whole network effect so that they can also tap into the cross-border payment capability. B2B, again, we talk a lot about this is a huge opportunity. Based on my estimate, I think the total transaction amount is about $40 trillion. So think about just do the math, $40 trillion, if you can take a fee cut of 1% or 2%, that $40 trillion that becomes $1 billion incremental revenue
Yeah.
opportunity for the whole
Bigger than
company.
the total U.S. debt, I guess.
Right, exactly.
Yeah. So that is obviously quite huge. Um, One other question, and then we'll start to wrap up here. I wanted to get your thoughts. I know this isn't directly in Coinbase's crosshairs, but they do have a DAX integration with the Base app, etc. Citadel's comment letter to the SEC about potentially regulating DEXs as broker dealers, especially now that they're getting involved in tokenized stocks. And one of their big concerns is that you don't want, or I guess they don't want two different sort of regulatory regimes overseeing the same underlying security. Do you have any initial thoughts on that?
I mean, it will be a long debate. I don't have a strong opinion on this one, but I would say this is a strong debate. My bottom line is we do need a clear regulatory framework for the whole ecosystem, so that we know what the boundary is. What we don't want is, we don't have any clarity. I don't want to go back to like what we had 2 years ago because that just give the agency opportunity to go after this platform. I would rather have a clear regulatory regime or bill to govern these platform, then we have nothing. Now we have nothing. So what I recommend is, like everybody come down and discuss and debate, even though it could be a long, long way, but find a framework that works for, most people. And then we can go from there. I just don't want to go back to 2 years ago that agencies can go after and send Wells notice to all these platforms on a daily basis. So that's what I don't want to see.
Yeah, I don't think anyone wants that. Even the people sending those Wells notices. Okay, so just a couple things to wrap up here. I want to look ahead a little bit, and help some of our watchers and listeners in a very official, not financial, not investment advice kind of way, understand what's going to happen next. One question that comes up a lot is how Clarity, in particular, is going to help the exchanges, especially the ones you cover, Bullish and Coinbase. I know Bullish. I think they got a bit license, and now they're really trying to ramp up in the U.S. Coinbase is obviously the largest exchange in the U.S. Uh, we all saw what happened to Circle stock when Genius Act was signed into law about a month after it IPO'd. Do you anticipate something similar happening with Clarity when it relates to either of these stocks? And if so, or even if not, can you maybe give one or two kind of concrete reasons why?
So my prediction is I still believe whatever Clarity Act or whatever the market structure bill the Senate would come up with, I hope it will get passed in 2026. And if it get passed, I think that will give us, I quite like the altcoin summer. So now we only have clarity on the stable coin, maybe clarity on Bitcoin and also Ethereum and maybe some other like maybe two or three other coins, but we just don't have the clarity on many other altcoins. So my expectation is just like Genius Act. Like when we got Genius Act passed, we saw a little bit of stablecoin summer. So hopefully, Clarity Act or market structure bill get passed next year. Then we'll see another maybe inflow of both like capital and also people coming into this space. So I think that will be a very strong positive to the sector next year. I just don't know when. I hope I heard that it's still going on, and some people said that it can get passed by the end of this year. I don't think it will happen by the end of this year, but hopefully early next year. Then we'll hear uh, more stuff from the Congress.
Gotcha. Here's another question that I'm not sure you've been asked yet. If you have, let me know. Uh, there's a lot of talk. I mean, DATs are all trading at not all, but many are trading at significant discounts to market cap. Their NAV premiums are well below one. A lot of talk about matchmaking M&A. Do you get any sense of a company like Bullish or Coinbase trying to engage in acquiring or partnering with any of these companies? It could be a smart way potentially to get a lot of crypto on your balance sheet below spot price. And I know in particular Coinbase is starting to make some noise about buying and holding crypto on its own balance sheet.
So I haven't heard anything related to either Coinbase or Circle or Bullish wants to buy any deck. I would say from an analyst standpoint, I would rather see the management invest their capital into longer term project like building the infrastructure, partner with some TradFi companies or building the bridge and things, or building like prediction markets and tokenization project and things like that, than buying a debt company. But that's just my perspective. I felt like if you do more infrastructure or create more infrastructure for the longer term, that would help the multiple and also long-term revenue growth. Because I'm not sure whether debts can give you a lot of revenue growth from that perspective. But if you get into, let's say, B2B cross-border payment, that's again, it's a $40 trillion opportunity. Even though if you penetrate into like 1% of this market, your incremental revenue opportunity is huge. It's massive. So to me, from an analyst standpoint, I would rather them to go to create use that capital for longer term project.
Gotcha. Fair enough. And last question. A lot of the IPOs, I mean, Circle had one of the, I guess, most successful IPOs of all time, at least in terms of percentage growth. It's given up virtually all of it by now, or the vast majority of it. A couple of other recent IPOs have also fizzled, and companies are trading well below. I mean, Bullish is one of them. Gemini Space Station is another. And I'm just curious because there's another set of companies ready to IPO. I mean, there's Kraken, there's blockchain.com, Fireblocks is rumored. There's another, I'm sorry, I think Chainalysis is another one that's potentially rumored to be doing it. So, what are you thinking when it comes to new IPOs in crypto? Has the moment passed, or like, do you think there's going to be delays? What should investors think about when keeping in mind this recent history of significant surges on the days or day of or days after trading, but now with a few months of perspective, they've come back down to, I guess, more reasonable premiums and multiples.
Yeah, I mean, I wouldn't comment on the stocks I don't cover, but the two stocks I cover, Circle and Bullish, I also went through the process. Actually, both stocks are still above the IPO price. So Circle, I think IPO at $32, even though the stock came down a lot, but actually it's still 100% above the IPO price. And for Bullish, I think the IPO price was about $37, and the stock today is trading at around $48. Again, this is also above the IPO price. So you ask about whether the moment has passed. I don't think so. I think if you are a solid company, if you generate positive EBITDA, you have a good long-term vision and long-term project, I still think you can command a good multiple in this market. I wouldn't comment on any specific name you just mentioned, but to me, the bottom line is if you can show the investors that you have the long-term vision, you really have like that your project has long-term project, you're disrupting a specific area, or you're creating an incremental demand that people really want. I still think those are good companies that can go public and command a good multiple in the public market. So we'll see what come out next year, and I'm excited about this opportunity actually.
Gotcha. Great. Any last thoughts before we wrap up?
I think that's it. Thank you for having me. I hope you all have a good day.
Okay. All right. Well, thanks everybody for watching and listening, and stay tuned because up next is our debate between on MicroStrategy, excuse me, on strategy between Mark Palmer and Vinny Lingham. Hi, everyone. Welcome to this special episode of Unchained. I'm Steve Ehrlich, Executive Editor here at Unchained, and I am filling in today for Laura Shin. And we've got a really terrific show for you. Strategy has been in the news a lot, especially over the past week or so, related to not only its falling share price and declining NAV, but also some questions or even FUD, as the sailor acolytes would suggest, about its ability to pay its, $700 million a year in dividends, et cetera, and how they're responding to that. So there's a lot of discussion related to what the outlook is for strategy, but then even more broadly, the entire DAT ecosystem. We've got a really terrific debate lined up on the pro, or I guess on the bullish side of strategy. We have Mark Palmer, senior equities analyst at Benchmark StoneX. And on the bearish side, we have Vinny Lingham, a longtime crypto entrepreneur and the co-founder of Praxos Capital Management. Both have been regular guests on our shows in the past, Unchained and Bits and Bips. So we're happy to have them both here. Welcome, both guys.
Thanks, Steve.
Thanks for being here, Steve.
Are you a builder who needs to add on-chain trading to your product? The Uniswap Trading API from Uniswap Labs offers plug-and-play access to some of the deepest liquidity in crypto. It's on-chain execution at an enterprise level. More liquidity, less complexity. Visit hub.uniswap.org to learn more. Mantle is pioneering blockchain for banking, a revolutionary new category at the intersection of TradFi and Web3. Follow Mantle_official to learn more.
Just a typical disclaimer. As always, nothing that we say here is meant to be investment or financial advice. For more disclosures, please look at unchained.com/bits and bips. And with that, let's kick things off. A lot of our audience is probably very familiar with strategy, perhaps even too familiar with strategy, given how much it's been in the news over the last 5 years or so. But Mark, I know you just put out a report on them. Maybe kind of just set the table for where you see things right now in a world where, again, the stock has declined rapidly. MNAV, I think, even briefly fell below 1 for a little bit, even though I think it's above 1 at this point right now. And there's a lot of concerns that the party's over when it comes to that. So how do you assess strategy at this moment?
Yes, well, I've got a bit of perspective on this because I started covering strategy back at the beginning of 2021. I was the first equity analyst on the street to be covering it. So we've seen in the intervening years, the company go through a period not dissimilar to this in late 2022 after the FTX collapse occurred. And at that point, we heard a lot of the same things that, Bitcoin was dead, crypto was dead, strategy in particular was dead. And of course, that was not the case then. We don't think it's the case now. What we do see is that, number one, there's a definite decline in liquidity in the market, which you can trace back to the flash crash that happened on October 10th. That was exacerbated by a 43-day government shutdown. So the macro has not been helpful. The crypto-specific liquidity aspects have not been helpful. And, more broadly speaking, we've had so many DATs come into the space over the last number of months that there have been, other companies that are drawing capital away that otherwise might have gone to strategy. But all of this is very much temporary, very much in the near term. And if you look at what strategy has created in terms of its capital structure and the infrastructure that it's built around its Bitcoin acquisition strategy, it's unmatched. No other company can point to the perpetual preferred stock issues that strategy has pioneered and now has 5 of them out in the market. This is close to non-dilutive capital that it can raise. There's no fixed maturity rate, so it's effectively permanent capital, which if your business is acquiring a volatile commodity like Bitcoin, then having permanent capital is an enormous advantage relative to the rest of the market. So, we expect strategy to outperform as it did for the first 4+ years since the company adopted its Bitcoin acquisition strategy, and not only relative to the rest of the market, but versus other DATs that are out there because it has all of these advantages.
Okay, a lot to unpack there, but Vinny, I want to give you a chance to sort of provide your bearish take on the stock.
Well, look, I think my bearish take is on MSTR, the commons. I think that the prefers are fine. I mean, look, it's if you had to swap out BTC for gold and you bought, $50 billion worth of gold using common shareholders' money, and then you issued prefs against that for the tune of, call it 5 or 10 billion, and gave super high yields on those prefs, it would work the same way. Those prefs would be valuable, but the commons would be eroded over time. People just don't understand how waterfalls work, and that's the biggest issue with the market right now. You've got a very big retail base of investors who think that by attributing some sort of MNAV multiple on commons, they're going to benefit from it. And that's not the case. The only benefit they get is the more money they give Saylor to buy, the more he provides liquidity to buy Bitcoin from existing holders and pumps the price in the process, which is what he's been doing since 20, 30K. He has been the biggest buyer of Bitcoin over the past 3 years. And so as the MNAV multiple has compressed down to 1.1 now, whatever it is, he's out of ammunition. He cannot provide that buy support to create upward momentum in the price of Bitcoin. That said, the pref holders are making a killing. I mean, you can sit there, well, with the exception of, I think, STRD, the one where it doesn't accumulate. The other three are pretty good. Like you could buy STRF and you get a 9% yield. I think the STRC is like 11 nearly. So these are all great yields, but all they're doing is they're all vampiric on the MSTR stock. And that's the issue. So I think for me, it's just like trying to educate people so they understand what they're buying. If you want Bitcoin exposure, buy Bitcoin. If you want leverage Bitcoin exposure, you could buy some call options, which I think is a lot better than buying MSTR. I think MSTR is just sitting in a precarious situation where the prefs are sucking the blood out of it.
Yeah, good point. And Mark, I mean, maybe just to level set for everyone listening here, because Vinny rightfully threw out a lot of acronyms for different types of preferreds that Saylor has very creatively used to kind of build the cap table. Can you just walk us through like how his cap table is structured, like one of the different types of preferreds, because that's new this year, I believe, to this fundraising strategy, and give us a sense of how big that is vis-a-vis the common shareholder base.
Sure. Well, at this point, Strategy has 5 different flavors of perpetual preferred stock out in the market. It just added STRE, which was focused on Europe. And each of these has its own characteristics, that appeal to different segments of the fixed income market. I think that one of the things that gets overlooked here is that Michael Saylor and his team have pioneered an entirely new asset class, which is Bitcoin-linked fixed income. And these perpetual preferred issues are the first ones that are out there in the market. We'll see if others follow. They're certainly trying because they understand the advantages that permanent capital gives to any crypto acquisition strategy. But the company now has just under $7 billion of these outstanding, and it does have dividends that it needs to pay on an annual basis that are associated with this. So to look at the capital structure, writ large, company has $8.2 billion of convertible bonds that are outstanding. They have an average maturity of 4.4 years, an average coupon of just 0.42%. Because the company hit the convert market at the right time, was able to get extremely favorable terms. With that said, Saylor has stated that the company intends to equitize those converts over the next few years and effectively replace them with more perpetual preferred issues so that its entire capital base will be effectively permanent capital. So where has there been, some hullabaloo is the fact that you have 35 million in interest associated with the converts. You also have on top of that another 734 million of annual dividend payments. Put it together, you're right around 789 million is their annual nut. And the question is, since the company's software business only throws off something like 60 million of free cash flow, where is the cash going to come from, to pay for those obligations? And, we just saw an answer because the company established a USD reserve, starting off at $1.44 billion, should cover 21 months of its obligations, with the goal of, extending that to beyond 24 months.
Can I just point out something? That was at the expense of common shareholders.
It was.
He diluted the commons. He's diluting the commons to pay the preferreds. I mean, look, and obviously the definition of a Ponzi is when you get new investors to pay old investors. That's a classic definition. Maybe not quite so in this case, but he is diluting one class of shareholders to pay four other or five other classes of shareholders. And that is a concern.
I would say that that would be in the category of an investment, because what are you doing here? You are establishing this reserve to address, these concerns where, the detractors of strategy had become quite vocal. And so strategy management responded to that by making it very clear, very transparent, exactly where that cash was going to be coming from. Yes, it did involve dilution, but I think in this case, that dilution was ultimately to the benefit of the common shareholder because it's going to address one of the biggest concerns that the critics have raised about the stock, and allow the company to get back to the business of executing on its plan, which is continuing to raise capital and use the proceeds to buy more Bitcoin.
Yeah, I mean, but it kind of flies in the face of everything Saylor's been saying up to now, which is, don't sell your Bitcoin, sell a kidney, use the money to buy Bitcoin. Now he has to hold cash. So why wasn't he doing this when the MNAV was 3 or 2.8? Why is he doing it when the MNAV is 1.1? I think it was just a lack of foresight and just naivety about the crypto market. Because I've been in crypto for what, 11, 12 years now. In my mind, Saylor's a little kid. He's just come along the block the past few years. He doesn't really, 10 years ago, he was tweeting out how much he hates Bitcoin and how he thinks it's going to collapse. And so, I think it's just naivety. It's all it is he didn't understand the vol and how the vol is going to affect him. And again, you've stacked up a bunch of these prefs against some commons, and now the commons have to support the prefs. And so, look, again, I think the prefs are fine. If you go and borrow money against Bitcoin, and effectively what he's doing, he's got like a 10 or 12x coverage at the current prices. That's fine. You could go to any lender right now and lend Bitcoin at probably a 2x, right? So he's a ample coverage. That's not the issue. The issue is that, first of all, if we're in a bear market, that ratio does come down, so it does put pressure on on the reserves. But as that number comes down, that's where the concern is. Like, do we have enough cash, or do we have to sell Bitcoin to pay the interest on the debt? And he's saying we're never going to sell Bitcoin, which is a fine position to take. Again, my point was he should have done this at 2.8, 2.7, 2.5 MNAV, not 1.15.
Yeah, well, I think if you look back at the last 5 years, since the company launched its Bitcoin acquisition strategy, there have been a lot of learnings that have been acquired by strategy, largely by making mistakes and then having to undo those mistakes. And frankly, Michael Taylor was the first one.
Sorry, making mistakes that have been made before. I mean, we've seen this through FTX. We saw this through Mt. Gox. We see this through all the different crashes over the years. Like, there was enough institutional knowledge within an industry around how to manage risk in a high volatile environment like Bitcoin that he just ignored over the past couple of years. And again, my point is, whether I don't think it's necessarily a fiduciary responsibility to common stockholders, but he's been harming common stockholders, and that's been reflecting in the price of commons. Commons have gone from mid 500s to 180 right now, 170 down to 160, I think, earlier this week. So this is the issue, right? Like, it's what does he have a fiduciary responsibility to making sure that the commons are looked after, or is it just, hey, raise as much debt as possible, buy as much Bitcoin as possible, and to hell with the commons, and if Bitcoin goes to $1 million, everything will be okay. That's kind of like the bet he's placing, right?
Well, if you look at, first of all, with regard to taking care of the common shareholders, if you look at the performance of strategy shares since the company adopted its Bitcoin acquisition strategy, we did have a stock split that's blended in there, but it's been one of the most successful investment strategies that's ever been introduced into the market. And, it's outperforming NVIDIA, outperforming the S&P 500, outperforming Bitcoin by leaps and bounds. But when I was talking about, the company making mistakes and acknowledging and learning from its mistakes, what I was talking about was some elements that it had in its capital structure that were not consistent with a Bitcoin acquisition strategy. Specifically, some of the debt covenants that it originally had when it had senior secured debt outstanding, and the fact that there was a level at which the company would need to refresh the collateral underlying its then $205 million Bitcoin-based loan, which got a lot of negative attention. There was a lot of misinformation floating around on social media about that. The company acknowledged that was a mistake to have any sort of trigger any sort of debt covenant, any sort of situation where they could be facing um, a margin call, because the folks on social media are just going to grab that, run with it, and make it out to be much more than it is. So what do we have now? We have a capital structure that's been refined. We do still have 8.2 billion in converts. The company has an intention and a plan to equitize those and replace them with an instrument that has no triggers, has no margin calls, has no covenants, which are the perpetual preferred shares. So, and again, Strategy is the only one in the market that's been able to go out and not only issue these, but issue almost 7 billion of them to make it the foundation of its future capital structure. So, I think that all of this is being done in the best interest of shareholders. Ultimately, if you flash forward and the company has permanent capital, no fixed maturity rate, it could be on the books for 100 years. That's the ultimate flexibility that matches very well with a company that's going to be, looking to acquire a volatile instrument like this. And, there have even been, folks talking about, if the price of Bitcoin gets down below the company's cost basis, they'll be in trouble, which is nonsense.
I agree. It's not, no, I think common shareholders in trouble, but I think the company's fine. I think the prefs will still get paid out. I agree with you on that. Back to that point, actually, the average cost per Bitcoin for sale is 75K. And Bitcoin's at 92 right now. With the past 3 or 4 years, he's been accumulating the bulk of it. He's made less returns than gold and pretty much anything else as it stands today. So it hasn't been a very successful strategy buying the tops and buying Bitcoin at 125 and 120 and 115. Right, going into the end of a cycle. I mean, I don't think he understands the cycles of crypto or Bitcoin very well. Maybe he just says, "Oh well, long term, it doesn't matter what happens in the interim." Again, my point. So let me ask you a question: what percentage of the total capital you got, your fund has invested in MicroStrategy's stock, issuances, is the commons versus the prefs?
Well, we don't have a fund per se. I'm an equity research analyst, so I'm just providing views on this. But I absolutely agree that the preferreds are a screaming buy. Given the yield that they are offering, given the collateral coverage that you see there. I happen to believe, though, that the equity at these levels also falls into the category of screaming buy, simply because the current valuation, the current price level reflects a temporary liquidity squeeze that can be traced back to the flash crash on October 10th. We're right around the corner, I believe, from seeing the Clarity Act put into place. That will give a green light to institutional investors who've been on the sidelines to come into the space in earnest. And I don't think that the market fully appreciates exactly how important that Clarity Act is, because, right now we have a presidential administration and SEC that is favorable toward crypto. That wasn't the case 4 years ago. It might not be the case again in 2029 and beyond. So codifying these changes that would make it very clear what the rules of the road are for crypto is crucially important for any institutional investor who's going to be looking out, 5+ years, and, would still be concerned that the rug would be pulled, by the government after they got fully invested in this space. The Clarity Act, like the Genius Act, is a game changer. And I believe that Strategy is going to be one of the beneficiaries of that when it finally does get enacted.
Two quick questions, Mark. I want just to follow up on a couple things you said. Vinny, I think you mentioned this too. Saylor, I guess by design, famously buys at every local top. I mean, that's often because there's so much excitement about the space and Bitcoin that it's easier to raise funds. But I mean, he was quiet during the drawbacks, and there's a lot of questions surrounding like why he's not able to quote unquote buy the dip. I mean, that's good advice for a lot of other investors that are looking to sort of DCA, dollar cost average. I understand the mechanics of raising funds and getting that additional dry powder. It's harder to do it during bearish periods, but I wonder if there are any ways that he might be able to do that, or I guess Fong, the actual CEO, if they're able to do that, to try to take advantage of these dips, with the to get a little extra benefit for if and when the price goes back up.
Well, I think that's where the perpetual preferreds really come in. Because once we see these instruments mature, once the market is of fixed income investors is better aware of the advantages that they provide, it's going to be easier for the company to sell those. I know that STRC in particular, which is effectively a money market substitute, has gained a great following, but it's only scratched the surface in terms of those who would benefit by buying it. Once that has happened, and again, this is a company that's going out and effectively building an asset class from scratch. And so getting that message out there, letting investors better understand exactly, what would STRC stretch enable them to accomplish versus their other alternatives at this point, it takes a little bit of time. This is where it's great to have an evangelist like Michael Saylor. That's what he's been spending a lot of his time on. Once that has been established, then the common stock ATM, really becomes much less relevant, and the ability to issue perpetual preferreds so that they can buy the dip becomes that much greater. So I think we're in a little bit of an interim phase in that regard. The company's certainly able to use, the five types of perpetual preferreds that it has right now. But in order to scale those up, there's going to be need to be more awareness. When it does come again, the common stock ATM falls by the wayside in terms of its importance and the need for it within the company's strategy.
I also wanted to just follow up quickly too, related to clarity. I've been wrong in the past about strategy. I thought that it was going to struggle, especially once the ETFs became effective. Almost the exact opposite happened. You highlighted how clarity might make things easier or be beneficial to strategy. Can you maybe just get a little more precise as to why?
Yeah, well, right now, you have a situation where institutional investors are still skittish about the crypto market in general. And part of that is because we don't have yet codified the rules of the road with regard to crypto that the Clarity Act would provide. Now, there have been no questions about whether Bitcoin is a commodity or security. Even Gary Gensler, during his reign at the SEC, would agree that Bitcoin was a commodity and not a security. But in our view, this is one of those situations where investors are going to come into the space. They're going to buy altcoins. They're going to buy into different structures. Bitcoin is inevitably, going to be a big part of that push. So this is the case where I think Bitcoin will benefit from the greater regulatory clarity, even though the current rules of the road, are more favorable to it. With that said, we had the last SEC chairman who happened to be favorable toward Bitcoin. It doesn't mean that in the future Bitcoin, couldn't come under attack itself. I think, again, having those rules of the road is going to be good for the crypto space in general. And what's good for the crypto space in general is going to be good for Bitcoin and ultimately for strategy.
Gotcha. And Vinny, comments here. I'm interested if you have any responses to what Mark just said, but I also want to ask your thoughts on MSCI and potential, I guess, what's the right word I'm looking for? Removal of strategy from some of those indices that then lead to a lot of passive buying from funds that track.
So again, it goes back to my point. The common stockholders are the ones that are going to absorb the shock of any of this happening. The prefs are going to be just fine. Maybe the yields just go up a little bit, but the prefs aren't going to get hit. So if there's an MSCI delisting because of the percentage of BTC on the balance sheet, what we're going to find is that the passive buying is going to stop, and the passive buying typically goes into MSTR, not into the prefs, and so you're going to have less buy support to pick up MSTR, and so that price is going to come down from 180 something to 150, 120, somewhere around there. But again, I don't have an issue with the prefs. I think the prefs are absolutely fine, except in the event that Bitcoin has a massive sort of drawdown to 20K or something like that, 15K. And because remember, right now the commons are paying the interest. Okay, through, especially through the issuance last week where, he raised the 1.4 billion, the Commons are effectively paying interest for the next 21 months. And if he wants to, beef up that fund, he's going to sell more Commons at the ATM and put that money into the fund or whatever else. Leverage works very well in an upcycle. When things are going up and you got leverage, you look like a genius. When things are going down and you got leverage, you look like an idiot. And so Saylor hasn't had the amount of, in the last cycle, he didn't have the sort of leverage. He had single MSTR common stock, and what went up and went down, it was all linked to, a bit of his business plus the underlying BTC being held. Now he's got leverage. And so the scary thing is if this thing goes even to 50K or 40K, the MSTR common stockholders are going to get wiped out. They're going to get down to very small amounts. But again, the prefs are fine. The prefs are fine until until the Bitcoin he has in his books goes below, I don't know, like 8K, which is probably unlikely at this point. So I think he's fine. So look, as an investor, if I wanted the sort of yield instruments out there, I think MicroStrategy's got the best yield instrument out there right now in terms of yield mechanism, and it's pretty easy to get out before shit gets bad because the liquidation level for the prefs is so low. But I think MicroStrategy common stockholders are playing with fire. I think it's if the Bitcoin cycle is going to bear cycle for even a year or two, that's a year or two of interest. 700 mil, 800 mil, whatever a year, that's going to come out of the commons and be diluted out. And he's going to have struggled to raise additional capital to provide buy support for Bitcoin when the MNAV is as low as it is. So as that MNAV goes 2 or below 1, you're going to have the same thing that you have with GBTC. And so it's just going to be kind of like, hold and wait and see philosophy. Now, look, I'm just giving you a view on this. I could be totally wrong. And next year we're going to a total bull cycle. The inflation runs hot, government printing goes crazy, Bitcoin goes back up to 150, 200K. Then he looks like a genius. But this is my point. Like it's based upon the Bitcoin. So the MNAV plus the market momentum for BTC. And the common stockholders are gambling on the upside versus the downside. So if you're bullish Bitcoin, you think Bitcoin is going to 200K next year, yeah, buy some commons, go for it. It'll do well in that event. But if Bitcoin doesn't go that way, and even if it drops 20-30% from here, you're going to get hurt. So this is the problem. It's a leverage. It's a leverage play, and he's quite honest about this, and he's quite open about the fact that he doesn't really care about the common stockholders on the way down. He just cares about making sure he has enough Bitcoin so on the way up. So it's kind of an asymmetric offering. But again, people don't understand how waterfalls work. I spent my career in Silicon Valley doing recaps and Series A and B and C and all these different rounds. So I have a very, very good understanding of how these converts stack up and how these. I'm just like, I wouldn't do it.
Mark, what are your like short-term expectations for the common stock in particular? And I also, I'm sure you saw an interview that Fang Li, CEO, gave to Bloomberg yesterday, where he actually talked a little bit about perhaps, I guess, engaging some of his Bitcoin in lending facilities. And he even said that there could come a time where they would sell some Bitcoin to cover dividend payments. I think years down the road, I guess, perhaps to avoid diluting common stock shareholders too much if it ever came to that. But he definitely did not close the door on that. But yeah, what are your kind of expectations? And I know that in the past, I mean, and this is one of the reasons that the Bitcoin community loves Saylor so much. He's been so dogmatic about holding your Bitcoin. That $200 million loan like freaked out the entire industry that you mentioned, so they never did it again. But it certainly seems like they're open a little bit more to leveraging their balance sheet to perhaps kickstart the MNEF premium again. So what are your thoughts on all that?
Yeah, one thing I would note with regard to Fang Li's interview with Bloomberg is that he said that the company would sell Bitcoin as a last resort. And I think it's important to make that distinction. This is not something that's front and center for the company. They've got plenty of other options at this stage. I think what he was just demonstrating is that the company is not so dogmatic that it wouldn't do what is in the best interest of common shareholders under those circumstances. But
Oh, sorry. And also when he was making those remarks too, to piggyback on what you said, like he said, he understands the role that strategy plays in sort of the community mindset, and he knows the type of just like how, I guess, traumatic, for lack of a better word, it would be for the industry if MicroStrategy or if strategy sells anything.
Hey, founders and developers. If you're looking to bring on-chain trading to your product, wallet, or platform, check out the new Uniswap Trading API from Uniswap Labs. It's your plug-and-play gateway to global on-chain liquidity. No deep crypto experience required, and no need to manage complex integrations or ongoing maintenance. With the Uniswap Trading API, you'll get enterprise-grade on-chain execution, combining both on-chain and off-chain sources for the most competitive prices. Simply put, more liquidity, less complexity. And this isn't just any API. It connects directly to the Uniswap protocol, which has securely processed over $3.3 trillion in total volume with zero hacks. So stop worrying about liquidity infrastructure and focus on building your product. Get access to the same liquidity that powers billions in swaps through one powerful API. Visit hub.uniswap.org to learn more. Mantle leads the establishment of blockchain for banking as the next frontier. UR is the access layer that transforms Mantle Network into a purpose-built vertical platform, the blockchain for banking, that enables financial services on-chain. UR unifies and vertically aligns Mantle's focus on payments, trading, and assets. MI4, METH protocol, functions FBTC, supported by developer grants, ecosystem incentives, and the industry-leading distribution platform through the UR app, Reward Station, and Bybit launch pool. All economic activity within UR will be captured by Mantle Network to further drive value to token holders and establish its significance in blockchain for banking. Follow Mantle_official to learn more.
I think the fact that the company is thinking about ways in which it could generate income from its Bitcoin is, I think, just part of the evolution of this company's strategy and management's thinking. The company has avoided doing that for a long time. And if you go back to 21, 22, when Michael Saylor was asked this question, would you lend out your Bitcoin? He said, well, we wouldn't do that because we are concerned about counterparty risk. And, the only counterparty that has a fortress balance sheet that we would potentially do that with is JP Morgan. And, JP Morgan's CEO, is, infamous for talking about how he's not a big believer in Bitcoin. So the fact that now the market has evolved to the point that management would entertain this idea, I think is a positive step for the company. We've seen others, Metaplanet, which is the company that fully acknowledges that they are adhering to the Michael Saylor playbook, is taking it a step further. They've actually created a Bitcoin income strategy platform that's located in Florida, that's just focused on selling covered calls and executing other strategic moves aimed at generating income off of Bitcoin. If you can do that in a way that makes sense, i.e., you are protecting common shareholders by making sure that your Bitcoin is secure, then generating incremental income, using that income to address the obligations on the perpetual preferreds and the converts, that seems to me to be a step in the right direction. So, I think the company, given its position in the market, has had to be somewhat dogmatic up to this point. They have been holding up the flag for Bitcoin and for adhering to that. So selling Bitcoin, would make no sense. But utilizing that Bitcoin, putting it to work, that's in no way a contradiction relative to their strategy to this point.
Vinny, do you think that, what do you think of what he said? Is there a way to do this responsibly? And I'd like at this point to also sort of, because we have about 10 minutes left or so, broaden the conversation out beyond just strategy to some of the other Bitcoin DATs that are also having similar discussions and conversations both internally and externally.
Look, the real question again is how is the equity structure structured for whether it's a debt well, with a strategy which has got 5 different instruments or 6 different instruments, or it's a treasury company that just has one instrument, right? So if you have one instrument and no real debt against it, then you're just basically you're an unlevered play on Bitcoin. Bitcoin goes up, you go up. Bitcoin goes down, you go down. When you start stacking on all these other mechanisms, you basically what Saylor's doing is he's borrowing money from the future for strategy. He's saying, okay, I'm going to borrow $8 billion in the future to buy Bitcoin at today's prices, and I'll make sure that I have such conviction that the price is going to go sky high of this asset that I don't care that that the commons are going to pay the interest costs of that debt, so that when the upside comes, everyone shares in it. But because it's a preference, the commons pay for it. And what Fong's basically saying is that, look, if things go the other way and we go down, 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 and we can't extract money from the commons to pay the interest, then yes, we'll sell the Bitcoin. But at that point, it's going to unwind, because now you'll be selling the Bitcoin at a loss, because the average price will be 75. So if he gets to the point where he's trying to sell, and whether you use LIFO, FIFO, it doesn't really matter. The moment you get down low enough that you actually force to sell Bitcoin to cover it, it's a problem. Now, I do think that the reserve that they created last week was actually a smart thing to do and good risk management. I was calling for that a long time ago. I thought they should have done it 3 or 4 years ago. So it's just a little bit, again, naivety.
You just don't like that it came at the expense of the common shareholders.
Not at like a 1.15, MNAV. They should be at 2.8 MNAV. They should be raising as much cash as possible and just leaving it in the bank account and waiting for the market to cool off or come down. But he was so adamant about pushing and pumping the price higher and higher and higher. And he's been the biggest buyer of Bitcoin over the past 3 years, 4 years. And so you've now lost the biggest buyer of Bitcoin because he just doesn't have any ammunition to go and buy more. And so the market's trying to figure out what the equilibrium point is without Saylor as a buyer of last resort, especially when there were these big dips and corrections or whatever else. And so, look, I have a lot of thoughts on the whole crypto community and how, the notion that we can just sit around and hold Bitcoin and get rich is kind of retarded in my mind. You expect everyone else to do the work. It's very unproductive. I'm definitely more in the Schumpeter sort of framework or mindset of how value is created in society and how we should work and produce goods and services and that sort of thing. And there's just too many people out there sitting on Bitcoin doing nothing. And it's like, it doesn't sit well, and not just Bitcoin. I mean, there's tons of unproductive assets out there which people hold on to. And for a portfolio, some percentage is fine, but literally, like, I know people who have got thousands and thousands of Bitcoins and they do nothing all day. They're just unproductive members of society.
Yeah. Mark, what do you think, like, longer term, like, an appropriate MNAV for a company like Strategy is? Is it the 1 plus a little bit extra? Is it going to be 1? I know that the range can vary widely across companies. Some are less than 1 because of management fees, etc. Fong definitely wanted to remind, especially the Bloomberg anchors yesterday, that Strategy does have an operating business. I think he called it a $500 million software business, even though I think it only makes like $50 or $60 million a year. Like, how does that kind of fit in? Because again, in a not financial advice point of perspective here, people listening are going to wonder if maybe now's a good entry point for a company like Strategy, or even some of the other DATs that are trading well below 1. Like, how do you kind of see this evening? Do you see this evening out longer term?
Well, I think, one of the questions you have to ask is, why do any of these companies have an MNAV that's north of 1 to begin with? And the answer to that question really is that there is value that should be ascribed to the activities that the company are undertaking to be able to acquire more Bitcoin over time. What Strategy has been doing in terms of, building an entirely new asset class of Bitcoin linked fixed income, that is a value added activity. What the company has been doing in terms of tapping the capital markets is a value added activity. So I think the extent to which a company can demonstrate that it is differentiated and that it is adding value should be reflected in its MNAV. Now, there are a lot of DATs that have been formed over the last number of months. Some of them are trading at pretty steep discounts to MNAV. And so the challenge for them is to demonstrate that there's a reason for them to exist, that they are differentiated, and that they are going to be able to create value to an extent that's superior to other alternatives. That's not going to be something that all of them are going to be able to accomplish. And so that means there's likely to be consolidation in the space. There's likely to be unwinds. One of the questions that I asked Michael Saylor on the company's last conference call was whether strategy would be looking to play a role in that consolidation by buying some of these DATs at at a discount to MNAV. That activity in and of itself would be accretive because Strategy's MNAV would be significantly higher than the target's MNAV. You'd be able to acquire a lot of Bitcoin in a one fell swoop. His answer was that when you're acquiring one of these companies, you're not just acquiring the Bitcoin, you're also acquiring the rest of the company, including whatever operating business is there. That it introduces a degree of complexity and actually can detract from transparency, which what Saylor has said from the get-go is he wants a strategy that is fully transparent and very simple. So he's basically said at this point he does not want to do that. But I do think that as that shakeout occurs, strategy and the others that have the wherewithal to see through this evolution are going to be the beneficiaries, and that should be reflected in their MNAVs over time.
I actually wonder. I'm glad you brought that up because I was about to ask you that exact question. I guess two quick things, and then Vinny, I'll come to you because I know we have to wrap up soon. Do you think that's a smart play, a smart answer from Saylor? And do you see any companies that might be more, I guess, cleaner acquisition targets than perhaps one that's very leveraged and has a ton of converts that Saylor doesn't want to import onto his books, which I understand. And then two, this might be a bit of a nuclear option, but I always wonder, like I'm almost waiting for the corporate raiders to come in and try to raid some of these companies and just sell the Bitcoin or just acquire it and make the companies go away. Is that something that Saylor could potentially do as opposed to trying to play nice and do an M&A?
I don't think Saylor should do that. I think what he should do is go to the corporate raiders the moment things go below 1.0 MNAV for a company. So let's say the MNAV is 0.75. He should just provide bids and say, fine, you go in there, you buy the company, you sell me the Bitcoin off a balance sheet, I'll give you, because you can't move, 10,000, 20,000 Bitcoin like in a few minutes on the markets, right? So it's, he could sell them a put option or something so they can go in and then they could put it back to him at a certain price and he can absorb the slippage if any. So that's what I would do. I would be like, if I was Saylor, I kind of agree. I don't think Saylor should be in the business of buying treasury companies, but I think he should be in the business of selling put options to these guys who want to go do that, especially for large scale purchases, and then basically reverse all the craziness where he was buying Bitcoin at a premium for years and buying at a discount, because he's like literally the worst trader, or at least his team at Strategy, the worst traders ever. They buy at the wrong price point every time. And this is not even like a cycle issue. This is like they'll publish like, hey, we just bought 1,000 Bitcoin at 85,000 and the current price would be like 75. Like they spent the whole week pushing the price up, just buying at market. I don't know what they do, but they're like the worst trading company ever.
Well, I don't think they'd consider themselves to be a trading company. I think that they'd be adhering to the notion that dollar cost averaging, would make sense over time. And, they're not trying to time the market. They're simply trying to acquire more Bitcoin. So I take your point. If you're looking,
no, but they were pushing the price up. That was the issue. So instead of like letting the bids come to them and placing bids and getting, having sell orders go into you, they were chasing up. And you could see this clearly from the charts. They were always every week chasing up the price, trying to push it higher. Because look, I get it. When you have that much Bitcoin, you can push the marginal price of Bitcoin up by $1,000 or $2,000. All the rest of your Bitcoin goes up by that much as well. So there was this notion that the more they chased the price up, the more they would raise the value of the balance sheet, the more they could issue at the ATM in real time. So a lot of it was like just chasing the price up in the open markets. And then the moment they ran out of cash, the price would just come all the way back down. We would see this time and time again because the buy pressure was taken away. And I just think it was a foolish expedition, as we've seen, because they overpaid along the whole way and the MNAV was compressed. There's a better way of doing this. That's what I'm saying.
Mark, I want you to respond to that, and I know we have to wrap up. So why don't you just share any closing remarks that you have as well?
Yeah, I think again, the approach that strategy is taking is really focused on, how much Bitcoin the company is going to be able to acquire, over time, and do so, uh, you know, to put themselves in an advantage position. I think that by any measure, they have certainly done that. The fact that they are at the forefront of issuing, the ideal instrument for a Bitcoin acquisition strategy, i.e., the perpetual preferreds, demonstrates that. But I continue to believe that strategy is an evolving entity. They have acknowledged they've made mistakes in the past. They've learned from them. They continue to evolve. We may see further evolution in terms of the company trying to generate income using the Bitcoin that it holds, or in general. But what I see right now is a stock that has been caught up in a period of reduced liquidity, which is not permanent, just temporary. And there's a significant catalyst on the horizon with the potential enactment of the Clarity Act that should lift all boats, including this one.
And Vinny, just any closing remarks?
No, I think my closing remarks are that people need to understand what they're buying, and I think that often with this kind of retail mania and passive buying that we're seeing in 401ks and ETFs and MSCI listings, etc., you just have people buying what they shouldn't be buying, in my opinion, because they just don't know better. So the more we educate people, look, I have no problem with people buying MSTR. If you want to leverage play, go for it. I think that the more instruments he has, the more he confuses the market, the more it is just like fog of war, and you kind of just buy what you're told automatically. I just think it's dangerous for the long term, and not to just dunk on Saylor. I think there's a lot of companies out there who are getting a stock purchase even though they don't deserve to have a purchase because of passive buying and ETF and fund buying and whatever else. So it's a systemic risk, I think, that we have, and these risks are ones that only get uncovered when the tide goes out. And so I'll I'll just wait until that happens, and we can refer back to this video.
Well, next time we do this, we will we'll have a bet on what the MSTR price is at some point or a year from now, but we don't have time to do it right now. So Mark and Vinny, thank you guys so much for joining. It was a really interesting conversation, and thank you to everyone for watching and listening, and be sure to tune back in for new episodes of Unchained.
Thanks, guys. Good chatting.
Can ask
man.
about.
I don't even want to talk about the Eagles. Hi, everyone. Welcome back. Once again, I'm your host, Steve Ehrlich, executive editor at Unchained, and I'm here for part 3 of our 3-part live stream to break down the newest DAT that began trading on NASDAQ, Hyperliquid Strategies. We have David Schamis, CEO of Hyperliquid Strategies, and Bob Diamond, the former CEO of Barclays and executive chairman, to break everything down for us. But before we dive in, let's just take a quick break to hear from the sponsors who make this show possible.
Mantle is pioneering blockchain for banking, a revolutionary new category at the intersection of TradFi and Web3. Follow Mantle_official to learn more.
All right, so before we get in, I'd love to just hear about both of your journeys into crypto. David, why don't we begin with you? How did you get involved with this project? What's been your journey down the rabbit hole?
Sure. As far as my journey into crypto, I've been a traditional finance guy for years. I've been doing basically private equity style investing into financial services for over 25 years. Banks, insurance companies, lots of stuff in between. In 2015, I made an investment in Bitcoin. I should have bought more. But once you have an investment, you start really focusing on things. And
the real question is if you held.
I held. I never. The only ones I only get, the ones I don't have anymore is over the years, particularly early on, when I was explaining Bitcoin to people, I would give away a little bit. I'd send somebody $5 or $2 or whatever. And now it's like worth actual real money. So, but other than that, I've never sold any Bitcoin. I should have bought more, of course. But anyway, that was 2015. As a serious investment, the first thing we did as a firm, and the first thing I've done personally in crypto, was in 2021. We invested in Circle. We can obviously talk about that in more detail if you want, but that went very well, incredibly well. 4.5 years before the IPO. And then this last Hyperliquid Strategies is the second thing we've done professionally. And we were really made aware of Hyperliquid, the blockchain and the exchange, calling it early part of 2025. We spent time studying it. We can go into this more detail if you want, but we got to know the Paradigm guys. We thought it made a lot of sense to have a DAT for Hyperliquid for a whole bunch of reasons. And we got serious about it kind of in the late spring, and we announced the deal on July 14th.
All right, great. And Bob, I would imagine that a lot of people watching and listening will be familiar with your background at Barclays, but would love to just hear even more specifically about your journey into crypto and why you decided to get involved in this project.
Well, although David recommended to me that I buy Bitcoin at a much lower price than this, I did not. My introduction was 2021. We were introduced to the team at Circle. We engaged with a de-SPAC. We did a tremendous amount of work with Jeremy Allaire and the team in coming up with a valuation. And over the course of 2 years, when we're working with the SEC to have that approved, I'll come back to that later. I've got to tell you, Steve, it was, for me, I'm a bit of a techie. Both David and I started kind of in the back office as IT people, David at Solomon Brothers and myself earlier than that at Morgan Stanley. And we both have a bias to tech. We both have a bias to the infrastructure. And I was blown away the more I peeled the onion back on blockchain and the contribution that could make to financial services. On the other hand, it didn't take long to convince me that stablecoins were really going to be something that was natural, quite honestly. I mean, to do the opposite, to convince me that there's not going to be an institutional digital version of major currencies would be impossible in this day and age. So the question is it a central bank developed initiative or a private sector developed initiative, and then highly, highly regulated? I was clear it was going to be the latter. Eric Rosengren, who's part of our organization, but at the time was the president of the Boston Fed, was a great advisor and counsel to me as he was chairing the white paper from the Fed on the central bank version of the digital coin. So blockchain, stablecoin, the grounding I had there in the next 2 to 3 years before we ever even considered doing something different was enough for me to be very convinced that the integration of the best of traditional finance and the best of digital is going to happen. And then, I'm getting ahead of myself, but my goodness, the tailwinds coming from this administration relative to Biden and Janet Yellen and Gary Gensler, who were frankly guilty of malign neglect in terms of financial services and what's best for the customer. And I think the tailwinds now mean that there are traditional finance people like Bob Diamond and David Schamis, like Larry Fink, like the CEO of both Visa and MasterCard, who are really talking more and more about the importance of blockchain and stablecoins. And that leads to, as David said, it led to a very interesting opportunity for us with Hyperliquid, which quite frankly, we are even more excited now to learn about this initiative. We think that Hyperliquid, quite frankly, is the most exciting thing in the digital space today.
Great. Yeah, we're going to get into all of that. It's funny. I mean, thinking about just juxtaposing Circle trying to go public by a SPAC a couple years ago at what, like an $8 billion valuation.
Well, originally $4.5 billion was our agreed valuation. Yeah.
And then I think that you doubled it
to 9. Yeah.
Yeah, but before it ended up not happening, and now look, just a few years later, looking at what happened. I mean,
yeah, $4.5 billion sounded pretty good in retrospect.
Yeah.
Luckily for our fund investors, we did invest in the private round at 2.7 billion. So we did fine.
All right, so you get to keep your jobs. So that's
yes, exactly.
All right, so look, I mean, our audience is pretty astute when it comes to this type of stuff, and I know they're well versed in Hyperliquid and in the general offerings that the platform and the Perp Stacks provides, but would really love just one of you minute or two explain like why Hyperliquid and why you think a DAT is the right vehicle for it.
Yeah, maybe I'll take a shot at that. I think there's really two reasons, two answers to that. One, we